Yeah.
Yeah, we're getting there. But let's talk about something a little more uncomfortable than cold weather.
Ugh.
Oh, don't give me that eye roll. You know it's all fun stuff, right?
It's
Nobody's
all
in,
fun and
yeah, nobody's impacted for 30 years by mortgage interest rates, right?
right. Hey,
Yeah.
30 years, half a lifetime.
Yeah, pretty much. Yeah, they're up 6.54%. This is for 30-year fixed rate mortgages, 20% down with at least a point down, maybe even more. National average, all types of credit scores, first-time home buyers, non-first-time home buyers. So your results may vary, but 6.54%. And if this is the first time you've watched a market update in a month, you might be wondering, whoa, what the heck just happened? I thought the Federal Reserve cut interest rates. Dale, what the heck happened?
They came out and said they were going to cut the rates. Of course, you and I both know that many lenders had already built that cut in. But now, what's going on with the jobs and the market? It's all very uncertain. That is the crux of the problem.
Mm-hmm. And looking at this, we can very much see back in mid-August, late August, that's when the Federal Reserve announced that they were going to drop interest rates. They said, come September, we will be dropping rates. So all the lenders, they hedged their bets and they began to lower rates in anticipation. So we can see that we were actually in better position before the Federal Reserve made their announcement back in the beginning of August than we are today, which shows you that not everything is chalked up to what the Fed does. All their decisions, they kind of lead a trajectory of the economy, but that's about it. The economy is still going to do what the economy does. So, Dale, I always get this question a lot. I'm curious what your answer is. What's going to happen next?
I'm going to quote somebody I know very well, my father. He said, rates are going to do one of three things. They're going to go up, they're going to go down, or they're going to stay the same.
Yep. And in this case, it's exactly the same. And you might be thinking, well, that's not very helpful. How do I figure out what the best decision to make is? Well, it's actually, yeah, it is difficult. But I'll flip the question on you. If you had to make big financial decisions in your life and you had an election coming up in 7 days, and then a federal funds meeting coming up in about 14 or 15 days right after, would you make the largest financial decisions of your life knowing that those two very big events that could impact that large financial decision? You get the picture I'm painting.
Right.
And it's the same question that these lenders have to ask themselves. Is the election going to change interest rates? And is the Federal Reserve meeting going to change interest rates? And which direction? Because they're two massive events, it creates a ton of uncertainty in the market. And when people are uncertain, they just play it safe and they don't hedge bets in a cheap direction. They inflate things in case things go bad.
Right.
So
Yeah.
now let's talk a lot about a glimmer of hope, just a glimmer of hope. Today we are up on the market. Red and down is bad, green and up is good. As you can see, we've had a really bad rally in mortgage-backed securities. We've had a good day today. Today's a good day. We got jobs reports back. They, weirdly enough, it was a bad jobs report, meaning that we didn't have as many jobs created as expected, but oddly enough, that's good for mortgage rates. So in that case, we did have a little bit of a bump in the market today, and hopefully this creates some sort of stagnant position for mortgage rates until we get to the election. Dale, does that mean people need to wait 7 or 14 days to get approved now?
No, because what happens is, we call it in our business sleep at the switch. So the longer you wait to get pre-qualified, the longer you wait to start even looking at homes, you're going to find yourself short and not in a position to strike. And so don't wait. Don't wait. Get pre-qualified now. Get ready. Get things together so that when the opportunity presents itself, you're ready to go.
So I want to run the two scenarios that I'm thinking of in my head. If I wait for rates to come down and they do come down, why is not being approved today a detriment to me not being pre-approved in 2 weeks from now if rates are going to come down?
Because rates coming down will bring out more buyers, and then you'll be in a bidding war.
Thus negating your interest rate benefit.
Yeah.
Okay, let's talk
Short
about the
answer.
opposite. Yeah, let's talk about the opposite scenario. Why would I get pre-approved now if rates are going to come up in 1 or 2 weeks?
Knowledge is power, and knowing what you'll qualify for, knowing what kind of interest rate payments will bring, gives you, sit you in a great position to make the decision that's right for you and your family when the time comes. Knowledge is power in this game. You need to know what you're capable of, what you qualify for. That is just key.
Yep. And having the ability to make a decision is enormous. If you find that dream house before interest rates move either direction, if you're not in a position to actually make an offer on the house because you're not pre-approved, it doesn't matter what happens, you're not going to have the ability to lock in your interest rate and make any decision. So that's what we're encouraging. Get pre-approved now, so even if you're not buying a house because of these two massive events, you're at least in the position to make the right decision for you and your family when the time comes. Dale, thank you so much. I appreciate your time.
You bet. Have a great day.
All right, you too. Bye.
Okay. Bye-bye.